Tanvir is in London, caught up with Mohamed El-Erian. Let's go across to their exclusive conversation.
Does it become, an even stronger case now to look at emerging markets and look at India? Just this morning back home in India, the finance minister in India gave a quick comment and an official statement on how India is standing out in its growth path and is, doing the right things, pushing the right reforms to draw in more investments from overseas.
It's very difficult to be a good house when the neighborhood is disrupted. So India will find, unfortunately, that its efforts will not be fully rewarded as yet because of the global financial instability. Having said that, people appreciate that India has taken and is taking important steps. So India is better placed to navigate this volatility. But the big difficulty for emerging countries is you simply cannot be a good house if the advanced economy neighborhood is having problems.
So then where is the opportunity when you're saying that keep the cash for, digging into good opportunities that may come by in due course? Where do you see the opportunity?
So in the next few days and weeks, I expect major overshoots by countries and companies with good fundamentals. Now, what do I define as good fundamentals? Very strong balance sheets, a positive cash flow, and good management. It will be very hard for these countries and for these companies to avoid the general downdraft that we're going to see in global markets. So good names will be trading cheaply. This will be an opportunity for those with cash, and I've been advising people to keep up to 30% in cash, as you know. It will be a good opportunity for those in cash to slowly put their money to work. That's certainly what I intend to do over the next few weeks. An opportunity for those with cash, and I've been advising people to keep up to 30% in cash, as you know. It will be a good opportunity for those in cash to slowly put their money to work. That's certainly what I intend to do over the next few weeks, because patchy liquidity will amplify the market movements.
That's right. Mohammed, just one aspect that we didn't touch upon, and one big fear in the markets ahead of this vote was with the pound falling, as well as the currency market dynamics, getting a bit haywire, that, some mismatches within the system would come to the fore, which would perhaps lead to a currency crisis. Do you see the possibility of that right now?
Well, we will find out in the next few days. As you said earlier, the markets had gotten comfortable with the notion that Brexit would not happen. And I have a sense that some levered accounts have put on some positions that they are now going to be forced to unwind in a disorderly fashion. So keep an eye on levered accounts, because we are seeing some very large movements that are going to force people to close trades if they can find the liquidity.
And also from your point of view, just picking from your answer, it seems like you're saying stay with companies which are looking cheap on valuations, that have a good growth path, where management support is adequate and strong. Are you essentially monitoring opportunities in the equity markets in the coming few days, given the panic reaction right now?
In the equity market, in the sovereign bond market, in the investment-grade corporate market, and even in the currency market, you will see certain emerging market currencies come under pressure, even though their fundamentals are sound. So this is a time to be patient. This is a time to look for overshoots and to be guided by strong fundamentals.
Do you think this event would turn out to be somewhat of a Lehman-like situation? Of course, Lehman was a surprise. So in that sense, the market's reaction was also, pretty exaggerated on the downside. But even so, most expected that somewhere or the other, even with a slim majority, that the vote would tilt towards Remain. the negative surprise that's come in with the exit vote and the majority that has favored the same. Do you believe that, we could have somewhat of a risk aversion mode in not just markets, but also risk aversion in business confidence as well as consumer confidence going forward, which would heighten the risk of recession into the second half of this year, or perhaps more so at the start of 2017?
So the good news is this is not a Lehman moment. What do I mean by Lehman moment? It is when the payments and settlement system almost came to a sudden stop. Back at Lehman, banks didn't trust each other anymore. And once banks don't trust each other, the pipes get clogged very quickly. This is not the situation today. The banking system is in much better shape. So this is not a Lehman moment in terms of a sudden stop to the global economy. That's the good news. The less good news is if the financial volatility continues. And remember, central banks are out of a lot of bullets. They've already got interest rates very, very low, and they've already expanded their balance sheets. So there aren't all that many bullets left. So if the financial disruption continues, this will knock a bit of global GDP and will make the chance of recession in Europe much higher.
Right, and Mohammed, finally, this vote outcome has taken everybody by surprise. How would you summarize this event? It's historic, first referendum in nearly 40 years. One would be expecting an announcement from Prime Minister David Cameron very soon. The expectation is that he would resign. How do you see the UK as well as the European Union story going forward from here, their relationship and its impact on the rest of the world as we conclude this interview?
I think the biggest lesson to all the leaders in the advanced economies is that when you run your countries at low growth, and when the benefits of that low growth accrue to a small portion of the population, strange things happen. In particular, people lose trust in both the political establishment and the business elites. And that is what has happened in Britain. People lost trust in the elite and in expert opinion. A small majority of people seem to have opted for the uncertainty of Brexit over what their leaders were telling them. And this, I hope, will serve as a wake-up call, because this is not the first improbable or unthinkable that has taken place. Others have as well, and they will continue as long as politicians do not step up to the responsibility of generating high, inclusive growth.
Mohammed, thanks very much for taking out the time and speaking with us and clarifying this piece of news, what it means for the markets, for the benefit of our viewers. Really appreciate your time and your ideas.
My great pleasure. Thank you very much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.